All right, we are live. So, hey everybody, it's me, Alex Buriak, Senior Vice President here at Jet Lending. And today we're going to go over a very special topic on why wholesalers and agents should really have a good understanding of asset-based lending. The reason why I say that is we'll start dividing in between the two, between the wholesalers and the agents in a second, but understanding how loans work that are not conventional mortgages, that are not FHA loans, things like that, will help you grow your business. And this is why. Jet lending and other, I mean, there is a ton of reputable hard money companies in the Houston area, but not only around the country. Understanding how their financing works will allow you to be able to close more deals and understand if your buyer is able to close them in the time that they're stating. And this is why. So take a lender like Jet Lending. So we close 3 days from clear to close from title and appraisal report back in. Okay. And so you are, if you're an agent, you are exponentially closing deals if you end up starting to go into the realm of the distressed market seller. Okay. And if you are a wholesaler, understanding your buyer's lending parameters is going to give you guys a lot of comfort knowing if your buyer is real or not. So understanding this concept is going to allow you to have a lot less stress when they tell you who their lender is. My advice to both the agents and the wholesalers is to make sure that, let's say you get a pre-approval letter from Jet Lending. I would reach out to us, whether you're a wholesaler or an agent, okay, and say, hey, Jimmy just said that he's going to buy this house. He's got a letter from you. You guys okay with this? And most likely we'll say, oh, yeah, we totally know what's going on here. You know, we're just waiting for this or that and the other thing. If not, then if we're like, well, I don't know who this is. I don't know. You know, there are, sad to say, there are people that will go out and just make Word documents that look like pre-approval letters and do that. So always get with your lender to make sure that this is real. Okay. The other thing I want to go through is the numbers and the math. Okay. And this is why it's important. And a lot of you as agents or wholesalers think, why do I need to know this? You know, I got all this other stuff I got to do. I got to list the property. I take my pictures. I got to show it. I got to do all this kind of stuff. Why do I need to know this? And this is why I think you should. If you're dealing with people that are buying investment real estate, if you don't have a firm understanding about how they're buying it, you guys may start noticing things come to closing where you're like, well, how did this happen? How is this not closing? And it becomes very frustrating because a lot of times they'll say, well, the title company said this, or the lender didn't close. I'll tell you this right now. You could ask any hard money lender, and at least the ones I know of in Houston, there's a lot of reputable hard money lenders in Houston. We're one of them. We've never missed a closing. We've never run out of money. If it comes to closing, the money's not there, most likely not your lender. Okay, so it gives you an idea of what's going on and have a communication with your lender or your borrower's lender, or keep in check with your buyer to see what's going on, to see how this is closing so you can manage your listings appropriately. So one of the things I'm going to do first is go over how it works. And the second thing I'm going to go over is what's called transactional funding. So if you're an agent and let's say a wholesaler picks up your property, you know that this person can close. If you are a wholesaler and you have a spread that you can't assign, you have to use transactional funding for a same-day close, you know how to do it. Okay, so you know what it takes to get this stuff done. So I'm going to share my screen. I'm going to take you through it. And just as a reminder, if you guys wouldn't mind, please like, comment, share this if you think that's going to be helpful to somebody. Ask questions live. I got StreamYard up, so if you have a question, someone already said, like, I'll prove it right here. Someone says, hey, Alex, whoever the Facebook user is, hey. So I can answer questions for you that come up. I want these to be helpful to you. We're not doing this just to throw content out there. I actually want you guys to be protected. I want you guys to be making more money. I want you guys to be in the know. Okay, so let's say you're a wholesaler, you're trying to price your deal. You're an agent, you're trying to even see, listen, what's reasonable for this to close? This is how hard money on the loan to value side works. Okay, so let's say you got a property and you're going to list it for, let's say, $120,000. I'm just making up numbers now. Okay, let's say it's worth $230. Oh, that's $2 million. No, that's too much. All right. Let's say on a house like that, a reasonable repair is going to be probably around $35,000 on average from what I've seen. And property taxes, 230 times 3.5% most likely. Let's say about $850 in taxes. Okay, 3,500, 35,000. All right, so at 3 points, at 8.9% on average, this is what you're looking like on an asset-based loan. So that means that we lend 70% of the after repaired value. We close with 126, so the 70% is 161, okay? But your lender will hold the repairs in escrow. Even if they don't, and the buyer does it themselves, that spread between the value, ARV, and the repairs needed is always minus at closing. Okay, so that is 161 minus 35,000 puts me at something to closing at 126. Now you may be saying, "Hey, good eye, you're catching the 120. This is only a 120 purchase price." I'm going to show you why that matters in a second. All right, so the origination's off the total loan amount. You got your origination fees. You have your document fee for the lawyers to pull the docs to make sure it's in at closing. We always estimate the title fee. This is not a jet lending fee, but just your lenders notice that they may have a title. They're trying to estimate for what's going to be on the HUD from title. So just get with your lender. This is something just we do. If they're going to give you an idea what title is going to charge you, because as an agent, you should know that for your buyer. A wholesaler, you should know that for your buyer. If you're transactionally funding something, you should know that what the title company may charge you, so you can see what your spread is, especially if you're closing as a transactional funding. And again, we're going to get to that. So your total closing cost on this loan is $8,600, but your buyer's coming to closing at $2,600 because I'm lending more than what they bought it for. If you ever, I'll show you, this is what, $2,600. So I'll drop it another $3,000. Let's say 117 was the purchase price. I'm going to show you something. See how this is green? When you hear people say, "I do 100% financing," or you can buy real estate with no money down, this is what they're talking about. They're using a loan to value lender like Jet Lending, where they bought it lower than the lender is lending at closing. So they can roll in all the closing costs, the title fees, the insurance, the origination, all the docs, all that kind of stuff is all rolled in. That's how you get $0 out-of-pocket deals. So as an agent or wholesaler, you can start looking at the math on how lending works, so you can price your properties on what's reasonable in your market today. Okay, so that's why it's important to understand lending while you're marketing your property, so you can see what the 80% bell curve of your buyers, especially if you have to sell it quickly. Okay, and I know right now people are like, "I got no problem selling real estate right now." That's not the point. This is to span all markets. Okay, so if we brought this over back, same thing. If we took this to 145, your buyer's coming out of pocket $27,000. Okay, so it's all about how the person buys the property that dictates how much money they're coming out of pocket at closing. And if they're a flipper or if they're a landlord, this dollar amount equates to how much profit margin they're going to get. People that are holding real estate are willing to accept that margin over time, where flippers need it more immediately to cover their spread. Okay, so that is how a loan to value lending works. Now, you may see people that go up to 75% loan to value. And all you have to do is make sure you ask, okay, is that 75% loan to value with an 80 to 90% loan to cost rider where you're making me come out of pocket 10 to 20% of the purchase price or as is value, whatever's less. The reason why you should know that as a wholesaler or or agent is because, again, your buyers are going to run into it. They may not understand the math. You have to be the professional to make sure you quarterback your deal to make sure your buyers and be aware of what's going to happen. Okay, so that is one aspect of why you should know this. All right, so that is basically how the math of lending works with a loan to value lender. Now, for you guys, both agents and for wholesalers, when you guys are working with transactional funding, there's always there shouldn't be a negative connotation about the transaction as long as it's well known. So what transactional funding is used for is that, let's say you have a deal and you have it contracted between the seller of the property and you for $100,000. But let's say that you have a contract between you and the buyer for $120,000. And you can't assign it for some reason. What you can do is you can come to a lender like Jet Lending, or you could even go out to the title company you're using saying, hey, do you offer transactional funding? And what transactional funding means, because there's a misconception of it sometimes, is transactional funding is two closings on the same day. So you close A to B where you are B in the same scenario. The seller is A and you are B. You close the A to B transaction, and then you close the B to C transaction, you and the buyer, the same day at the same title company. So you close with one person, you close with the next person on the same day at the same title company. Again, Jet Lending does these all the time for wholesalers and people that are trying to do double closing. It's more advantageous if you're a wholesaler and agent that's doing this, is that you try to use the lender that the borrower is using for the transactional funding, okay? Because you'll have control over both sides. You'll know if the seller isn't or the buyer isn't going to close for some reason because you're in communication with both sides. So whether you're using Jet Lending or not, we would love for you to come here. But I totally understand. This is about education. This is about growing your knowledge. If you have a buyer that's like using Jet Lending, use this for the transactional funding. If they aren't, we can definitely still do it. But I'm just telling you, as someone who's trying to help grow your business, you probably would be better off making sure you use the lender with your buyer is using, so you have a full idea of what's going on in the deal, just in case something's starting to go awry at closing. Remember, we've been in business for 18 years. There's other hard money lenders in the city that's been open a long time too. We all know each other. I'm telling you, if it doesn't fund a closing, I'm telling you, it's not your lender. You have to try to figure out what happened in this deal so you can become get through unscathed. Okay, so transactional funding again is the same day closing between the seller and the wholesaler and the buyer. Okay, and there's a small fee. The cool thing about whole transactional funding with almost any lender or title company is that the wholesaler is really not underwritten because you're not closing the loan. Okay, so there's very, very minimal information to do it. We've done it within the next day for people because their lender kind of skipped out on them. So just make sure you talk to a title company one that's really, really seasoned in doing this. There's a bunch of them in the area. They work really well with investors. They understand the process. Ask them how many they've done recently. Have they had any issues with any things like that? Okay. Title companies are your bread and butter for deals like this. Some of them actually will do them for you. If they don't, you can come to a lender like Jet Lending and we'll do them for you. We do them all the time. So there's not going to be any issues with that. So the fact that as a wholesaler and agent, you understanding like the math of how the lending goes, you're going to feel more comfortable discussing things with your clients. You're going to feel more comfortable discussing things. Even let's say the client gives you you have to sign a waiver to get any information from your lender. I know sometimes it's frustrating. But if, like, let's say you're an agent or you're a wholesaler and you call about the deal, just know this: the lender can only divulge information to their client. And if you're not on the paperwork that says, hey, we're allowing this person to have access to the information, the lender may not be able to tell you, even if you're the agent. So just be aware of that. So if you are, let's say you're a super, super organized person and you want to be involved, get with your borrower to see if you can have access to the information, to the title company, to the lender, and things like that, because there may be things that we can't divulge because you're not the client, they are. So these are just kind of a couple things to get you a good feel about how to organize a business for growth. The last thing I'll talk to you about that has something that just came to my mind, and it's something totally unrelated to the financing thing, is the contract. Remember, if you are doing transactional funding, you need to have a contract between you and the seller and you and the buyer. And one thing I always liked putting in contracts when I was selling real estate was in special provisions. I used to always, but I always use the check contract. But in special provisions, I would always do add subject property, put the address there, but subject property is to close on the agreed upon date or 3 days from clear to close from title and appraisal report back in. What that means is if you are to, let's say we're closing on a deal on tomorrow, January 26th, and we get clear to close tomorrow, well, that's documented in an email. Remember, title company is the seller's issue, not the buyer's issue, okay? The seller has to perform. So that means I would automatically extend, and it's already in the TREC contract, by the way. But I'm one for redundancies. I'm one, the luck favors the prepared. So I just put it everywhere anyway. So, there's no hurt in it, but it's like it's clear as day. But that would extend you 3 days from clear to close from title and appraisal report in, because technically the seller did not perform in the time that was allotted. So maybe one day on our live educations, we'll actually go through the contract and really read what's in the contract. There's a bunch of things that you guys can use to really save your deal, especially as an agent or a wholesaler that's selling to investors, to make sure things are performing as they should. Okay, so I understand that some of you guys may be very seasoned in this, and some of you guys like, oh, I didn't know that. So we'll probably do one of those as well. I hope this was educational for you. Again, we're going to be doing these a lot. TierJet Lending, don't get me wrong, we love doing loans. We love them. Okay, these videos, of course, gets our name out there, but I really want you guys to be in the know. A knowledgeable investor is a more successful investor. When you come to me, you're more successful. You're more engaged on how to grow your business, and that's what these are for. We really hope you guys are gaining some. I really hope that you like our Facebook page, you subscribe to our YouTube page. If you have any questions, if you guys have anything that you guys want a topic on, let me know and we'll do it. We're here for you. Like I tell people, Jet Lending's a service company, and we're here to service you. We want to be a part of your team. We want to grow your business. We want to grow your wealth. So if you have anything that you need, let us know. We'll be there for you. I hope today was informative. If you have anything that we didn't cover that's specific to your needs, give us a call. You can email us at info@jetlending.com. You go to jetlending.com. You could instant message us and direct message us on Facebook or Instagram or whatever you need. Reach out to us on the way that you need to be successful, and we'll get your questions answered so you can make more money. I hope you had a great day, and we'll see you later.